There is no single trading strategy or concept that is actually profitable. Whatever you are trading, ICT, supply demand, liquidity, support resistance, VWAP, Bollinger Bands, you can name endless concepts. Every single one of them is absolutely pointless. Trading has nothing to do with the strategy that you are trading. Allow me to explain. There are two types of traders in this world. Trader number 2 consists of the top 5%. If you are not long-term consistently profitable yet, you are most likely in the category of trader number 1. In this video, I'm going to show you how you can switch to trader number 2 and build a long-term consistently profitable model. Doesn't matter what strategy, doesn't matter the concepts, that's not important in this industry. Trader number 1 is the discretionary trader, which consists of the bottom 95% of traders. These are the traders that are decision-based traders. They are very strategy focused and they trade based on what they feel or think is their setup for that particular trading day or week. So their trading decision process varies from different concepts, entry criteria, and or timeframes. Maybe today they had a simple change of character in an M15 supply or demand zone, and that is what they're trading for this particular day. Maybe tomorrow they had a liquidity sweep with a fair value gap displacement entry, and that is their setup for this particular day. Maybe the next day, all right, now we're in a higher time frame 4-hour supply zone, and that is their setup for that particular day. What these traders are doing is they are taking trades based on their own judgment and the current market conditions. So essentially what they'll have is they'll have their analysis, they will judge and see and feel what they think is their setup for the day and execute that particular trade. Now the problem with this is it's very difficult, and I'm going to say next to impossible, to collect accurate data on this way of trading, which means that this way of trading is never going to be sure if it's profitable long term, because it's different setups, it's different criteria every time. It is impossible to know if that is long term profitable. Also, these type of traders are very focused on the outcome of individual trades. That trade that they take today, they want that trade to be a win. If it's not a win, or if they have a losing streak of 2 or 3 trades, they start doubting that way of trading and they start to think, okay, this is not profitable, we're going to hop to a different strategy. Pretty sure you've been here before, right? And to conclude the discretionary trader, these are most of the traders that now and then pass a prop firm challenge, maybe 2 or 3 good trades, bit of luck, and when they get funded, they're blowing accounts. Maybe they get funded again later on. Yeah, maybe a payout or 2, and then they blow the accounts again. There's no sort of form of consistency. And maybe perhaps you have been this trader as well, because I certainly have. Trader number 2, and this is where the top 5% of traders are. I'm talking about FTMO leaderboard traders, London Stock Exchange traders, New York Stock Exchange traders, Wall Street traders. This is the category that they fall into. Trader number 2, rule-based traders. These are the traders where their trading system decides which trades to take, regardless of the current market conditions. These are the guys that don't let their emotions make their decisions. Unlike the discretionary traders, they now have rules and criteria that decides what trades to take, regardless of the current market conditions. There are 2 conditions to how they trade and when they are going to trade. And it's very simple. Either this is going to happen and they execute, or this is going to happen and they don't execute. It's always going to be 1 or 2 of those outcomes. Being trader number 2, it's very easy to collect accurate data and prove a long-term profitability edge with this particular way of trading. So what this means is these traders don't care about the outcome of their particular trade. They don't care if it's a win or loss. They've done their job. They've executed their criteria. They've executed their edge. And that is what is important. So essentially the difference between trader 1 and 2, trader number 2 is going to have an event where there's going to be certain criteria that they have. Either the criteria is going to say no or yes. If no, they do nothing. They don't execute. They don't care if it's the most beautiful supply zone or the most beautiful support resistance zone on this planet. If the criteria is not there, they don't trade. All the criteria is going to say yes. And then, simple, they execute. Their rules are there. They don't care if it's the shittiest conditions in the world, their criteria says execute, and that's when they execute their trades. These are the traders that don't care what strategy they trade. I know rule-based support resistance traders that trade on rules that are far more profitable than most ICT traders. I know supply and demand traders that are rule-based traders that are far more profitable than support resistance traders. I know a few ICT rule-based traders that are far more profitable than discretionary ICT traders and supply and demand traders. At the end of the day, it does not matter what strategy you are trading. The key to all of this is that you need to find a way to systemize and rule base and criteriaize the way that you trade. Regardless of that particular strategy or concept, it needs to be systemized. And that is how you are going to collect long-term, accurate data on backtesting and forward testing that gives you all of the bulletproof confidence going forward, tackling and approaching live capital accounts. By the end of this video, you are going to learn how you can become and shift from that discretionary trader and become a rule-based trader. Let's start off with who exactly am I? My name is Jay Froneman. I've created Funded, stands for Mechanical Methodology Funded. I am purely a rule-based and mechanical trader with about a 65% win rate, over 100 years of data collected, and well over 5,000 trades collected on my particular 4-hour trading strategy. What you're seeing on the screen over here is my live trading journal for 2025, where I've live streamed every single one of these trades with my free Discord community. I have no course, I have no mentorship, I don't charge for anything. Everything that I offer is completely free. The reason why, I used to be in the mentorship game, I gave up on it. I honestly couldn't be bothered with it, as trading is what I do full time amongst other things. And so I created a Discord that really documents my journey completely for free. I'm going to show you well over 30 funded members and about 4 of them that have gotten 5-figure payouts, in my country 6-figure payouts on their particular prop firm, and are now managing well over 6 figures in funding capital with my particular rule-based strategy. So these are all of the trades that I've taken in 2025 on live stream every Tuesday and Thursday, 2 p.m. GMT2, starting off with a total of risking 1% on a 100K balance, which I personally do. And if I'm up in the account, I risk 2% per trade. Safe risk, 25.5R gain from the 1st of January to today's date, 18th of February, 25.5% return. If you risk 2% a trade, well over 51R return with a 70% win rate. So that is, I think, 17 wins, 24 trades, 17 wins, and the rest were losses, 8 losses or something like that. 1, 2, 3, 4, 5, 6, 7 losses out of 24 trades. 70% win rate. Just executing the same criteria and the same repeatable process over and over again. By the end of this video, I'm also going to give you free access to my Discord community, where you will get access to every single trade that I take, my live streams, where we hop onto live stream as well every Tuesday and Thursday. Okay, so first thing I want to go over is just some testimony, a bit of inspiration for you on how rule-based trading has changed my life and hundreds of my members in my community. So I actually just posted literally 10 minutes ago. One of our traders who started off with a 5K account got a nice 4% payout on his 5K account. First time ever, first ever profit split. And the thing is here, it's a 150 payout, but the difference is that same 4% skill set that he's now consistently executing, he can repeat on hundreds of thousands of funding. All right, a couple days ago, we had another funded member with FTMO, 100K total funding. Some of our members getting well over 70% on their backtesting sessions. Here's another one of my OG members who just got over $9,000 in total in payouts in January alone using my 4-hour trading strategy. $3,800 with Alpha Capital and well over $6,500 with Funded Next. Another member over here got over 11% on his 5K account, if I'm not mistaken, and his first ever profit split from this particular prop firm. All right, more funded members, 5%ers, Funded Next, Alpha Capital again, $1,800 payout with their particular prop firm on Funding Trader Plus. More 5%ers, another payout of $550. I think this was 6% or 5% on his 10K from Alpha Capital. Another member with a 2.3% payout on his Funding Pips account. And I mean, I can scroll up for ages. Here was another member that got a $6,000 payout with their particular prop firm on, I can't remember now. They've sent it as a PDF. By Think Capital, 6,202. So that's over 11-12% on their 50K account size that they got using my higher time frame model. Okay, another $600 payout here, 120 payout, which was also just over 3% on their 5K. There's one member that really stood out this month, and we only started live trading on the 1st of January, literally live. Another member, 50K funded, another $1,300 payout, which I think was 13% on their 10K. All right, just going to keep scrolling up, looking for that one, which really stood out for me here. Funding pips, $15,600 payout using our higher time frame model in the month of January. Putting it all together, in just the first 40 days of trading live, I've created over 40 funded members. Personally, myself, I've gotten funded and payouts with FTMO, Funded Next, and Alpha Capital in the first few months, or the first month and a bit of January 2025 and the little bit of Feb that we are into now. I'm also going to give you access to my live backtesting session videos in the Discord. The link in the description will be down below. There's a channel called Backtesting where I am backtesting 6 years per pair in alphabetical order on fxreplay.com. So this includes 6 pairs over 6 years. So this is 24 years of data across 6 pairs. 217 total trades, 155 trades, and 155 wins, 57 losses with a 73% win rate. With the same mechanical 5 criteria over and over again. We're not looking at trends, not looking at this, that. When the simple 5 criteria prints, we execute our trades. So what exactly are these criteria? How can you trade them? And how can you form a rule-based, long-term profitable strategy with these, or my particular 5 criteria? Fairly simple. You will see on the top right-hand side over here, I have a very simple checklist. Every time I get a setup that has all of these ticked, we execute our trade. Like most recently, a trade on CAD CHF that played out. Whether it plays out or not, it doesn't actually matter. But because we had our 5 criteria in place, we set limits. We don't argue. We don't care how bullish this market is. Once our criteria prints, we execute. So I'm going to go over each and every individual criteria. Criteria number 1 is simple structure story. Highs and lows, as we taught in the basics. Bullish market will move in, creating strong lows that break structure to the upside, creating higher lows. Bearish market will be creating lower highs with strong highs, creating breaks of structures to the downside. Now, the thing is, structure can become a very discretionary concept because different people will see different structure. I've particularly created a structure indicator for my higher time frame model with the checklist, which removes all that confusion and removes all of the hesitation and doubt on what structure to mark out. Okay, so simply how this works is here we had a break, pullback, break, pullback, break, strong low, most recent strong low, pullback, break, most recent strong low, pullback, break to the downside, most recent strong high, pullback, break, most recent strong high, pullback, break to the upside, strong low, pullback, break, strong high, pullback, break, new strong high, and it literally just marks out your swing and internal structure for you. So that's criteria number 1, done, is your structure story, which we already have done for you with our indicator. Number 2 is we need to see a previous or past strong high, a high that has created a previous break of structure, get taken out or swept. Okay, so for example, right over here, if I look to the left hand side, right, we had a break and a pullback with a break of structure to the downside. Now what we need to ask ourselves, the high that created that new break of structure to the downside, did it sweep or take out a previous strong high or low? Well, in this case, shorts, we need to see a strong high taken out. If we look to the left, we had a high that broke structure. We had a high that broke structure. We took out those highs and broke new structure to the downside. So yes, criteria 1 is checked. Criteria 2 is checked. Number 3, after the strong high sweep, did we have the opposite side break of structure to the downside? Well, here we go. Pullback, break. Here's our break to the downside. That's where my higher time frame model indicator literally marks it out for you. So there's criteria number 3, check. Criteria number 4 is we need to draw our fib from the high to the low at the start of the pullback with the 85 and the 71 level 0 and 1. Here are the settings here. If you want to screenshot, we need to have then for criteria number 4 in a short scenario or a sell setup, an order block, aka supply demand zone, same thing, different name, above the 71 fib level. All right, so here we had an order block that was created above the 71 fib level, and that is criteria number 4. So we have 1, 2, 3, 4 checked. Number 5, did that order block create an immediate volume or fair value gap? Well, if we have a look, we can see a fair value gap, bottom of the first wick, top of the third wick. There was a huge volume gap created from the supply zone. So there's criteria number 5. Criteria number 6, which is an A+ confluence, it's not required, is a corrective pullback. So here we had a pullback. So here our pullback started, but it started very slowly with a lot of wiki price action. It wasn't just 1 or 2 harsh volume candles that tapped us in. It was nice and corrective, creating these higher highs, creating nice inducement for the setup. And from there, all 5 criteria is in place. What does that mean? We don't argue, we don't hesitate, we execute. Now, this is the thing. Your risk management also needs to be rule-based. My simple risk management criteria is entry on the order block, stop always at the 1 to 2 risk to reward. So I'm always risking 1% to make a 2% gain. And using that simple risk management criteria, I have well over 70% win rate with the strategy. All right, entry on the order block 1 to 2 R. This was a recent miss we actually took with the group because it didn't actually tap us in. So yeah, that's fine. It's how it was meant to play out. We executed our rules. We're not bothered about the outcome of the trade. All right, another long position that we have set up on CAD CHF, strong low, break, pullback, break, strong low sweep, criteria 1 and 2 in place. We have the break to the upside with the candle closure, criteria 3, order block below the 71 level that created immediate volume, check, volume is there, check, pullback is nice and corrective, all criteria is in place. Entry on the order block, stop at the 1 to 2 R. And it's as simple as that. It's the same repeatable process and criteria every single time. Okay, now my whole point and what I want you to learn from this video is that you don't have to copy my exact strategy to the T, but what you need to do is with whatever you're trading, the strategy, the concept does not matter. You need to find a way to criterialize your strategy. Execute the same rules over and over again. That will allow you to collect consistent and accurate data. Because the funny thing is, I've got a 73% win rate on backtesting, but what really fascinates me is my live performance has pretty much been identical to backtesting with a 71% win rate. And that is because with the rule-based strategy, your backtesting data is a very accurate expectation of what you can achieve on trading live price. And I've seen that firsthand for the last while. If you guys want to get access to my Discord community, all of my recorded live stream trading sessions, my live backtesting sessions we do with the group on Sundays, some podcasts I've had with members in my community that have become full-time funded traders. This was one particular trader who is now a 200K FTMO trader with a 9K payout due. Another full-time trader that I'm just doing cool podcasts with to diversify and expand your knowledge in this industry. All right, all of my live backtesting content is here as well. 6 years data in alphabetical order, starting with the odd pairs. I'm about to upload the first CAD pair now because we've done all of the odd pairs this evening to the community. Also 6 years backtested. If you want access to all of this and also my structure indicator, I will leave a link in the description down below. And I'll see you guys on the inside and in the next stream. Take care.